what's wrong and why you never said you felt that way. And guess you're trying to stay strong and fake a smile until I look away.
Welcome back once again to CBSE Board Economics. My name is Saddam Hussain. I welcome you all. Today we will be discussing measurement of national income by income method. How do you measure national income by income method? Mind it, one thing, you do measurement of national income by any of the three methods: product method, income method and expenditure method, the answer will be the same, because a penny of goods produced in the economy is equal to a penny of income generated is equal to a penny of expenditure. If you produced goods worth 1 rupee, it means we have generated income in the economy equivalent to 1 rupee. So people in the economy will be spending 1 rupee in the economy. That's the logic. Let's go ahead with income method. How do you estimate national income by income method? Let's define national income by income method. National income by income method is defined as the net factor incomes, or you can simply write it as factor incomes accruing to the normal residents of the country in an accounting year. National income is defined as the factor incomes accruing to the normal residents of the country in an accounting year. We've seen who are the normal residents, who stays in a country and whose economic or center of interest lies in the same country. Okay, let's go to the steps involved in estimation of national income by income method. The first step is classification of industries which employ the 4 factors of production. All the industries in the economy are classified into 3 categories: primary sector, which deals with the exploitation of natural resources; secondary sector, which deals with the manufacturing of goods and services; and the last one is tertiary sector, that deals with service. It's called service sector. All transport, communication, trade, banking, insurance, all services will come. So basically the first step is classification of industries into 3 categories: primary sector, secondary sector and tertiary sector. The second step, classification of factor incomes or factor payments. All the factor payments or factor incomes in the economy are classified as 6 categories. We'll discuss one by one in detail. Number 1 is compensation of employees, or in simple words we say it as wages and salaries. What exactly is compensation of employees? These are the wages and salaries paid by the employers to the employees. It has 3 components, keep in mind. Wages in cash, this includes commissions, this includes salaries, that's in cash, this includes if the employer is providing you commissions, salaries, bonus or any other allowances in cash should be taken. B, wages in kind. This includes free rent accommodation, free food and free mobile phones, free car, and maybe whatever the perks we call it the employer provides to you. So wages in cash, wages in kind, and in military services they provide food to them, uniforms to their soldiers, they provide free accommodation to them, lot of other facilities they provide. And third point is under compensation of employees, employers' contribution to social security schemes. What it means, at the end of the retirement, the employer gives them pension benefits, gratuity, they provide them, and all other kinds of facilities when a person retires, that we call is or the employer insures your life. He will pay the life insurance premiums, he'll pay casualty insurance premiums, that all should be taken. So remember, COE is equal to wages in cash plus wages in kind plus employers, not employees, contribution to social security contributions. The first one. The second one is rent. Rent is the payment made to the factor of production called land for utilizing the services of land. The third one is royalty. What exactly is royalty? Royalties are the payments made for the use of patent rights, copyrights, trademarks. Like we are manufacturing Sony company, Sony TVs in India, but we pay a lot of royalty to Sony Incorporation in Japan. When I write a book, I'll get royalty from the publisher. So royalties are the payments made for the use of trademarks, copyrights, and we call it as subsoil assets. What is subsoil assets? The person who owns the land, he can give it to someone, he will dig out the subsoil assets, maybe iron ore, copper, whatever is available in it. So that's called royalty. Royalties are the payments made for the use of copyrights, trademarks, and subsoil assets. Okay, that is called COE plus rent plus royalty plus interest. Simple, one word. Interest is the payment made to the factor of production called capital. And next one is profit. Profit the entrepreneur will get. This is a reward given to the entrepreneur. Profit also has three components. Remember, number one is corporation tax. This is the tax which the big companies pay to the government. Number two is undistributed profits. These are the profits the firm keeps for further expansion of the firm. Undistributed profits, we call it also as savings of private enterprises or retained earnings, or in accounts they call it as reserves, general reserves. So corporation tax plus undistributed profits or retained earnings plus dividends. Dividend is the payment made to the shareholders. So that is COE plus rent plus royalty plus interest plus profits. And the last one is mixed income. What exactly is mixed income? Mixed income is the income of the self-employed people, like small shopkeepers, small doctors practicing at home, small beauty parlors, maybe small lawyers sitting at home, tour operators sitting at home. Some people may be having a small coaching centers. Their income is called mixed income. Why do we call it mixed income? Because these people do not prepare profit and loss accounts, and they do not prepare balance sheets. Since they are providing all the four factors of production themselves, it is difficult to distinguish their income as income from property and income from entrepreneurship, because it has all the four factor incomes mixed in it. That's why it's called mixed income. Mixed income of the self-employed is called mixed income, is the income of the self-employed people. So these are the six incomes we have in the economy: COE plus rent plus royalty plus interest plus profits and mixed income. 6. Okay, we go to the next major step. If we add all these 6 factor incomes, we get domestic income or ND paid factor cost, or domestic factor income. Domestic income or domestic factor income or ND paid factor cost. So what is ND paid factor cost? By income method or domestic income, COE plus rent plus royalty plus interest plus profits. The last step, estimating NN paid factor cost or national income. How do you find out? By adding net factor income from abroad to ND paid factor cost or domestic factor income, you get NN paid factor cost or national income. What is NFIA? I taught you earlier. Again I repeat, it is the difference between the factor incomes received by the residents of the country from rest of the world, other countries, and factor payments made to the non-residents, to the foreigners who come and work in our country. Factor incomes received from ROW, rest of the world, factor income paid to the rest of the world. So we get net NN paid factor cost or national income. That's it. I repeat the steps. Number 1, classification of industries into 3: primary, secondary and tertiary. Number 2, classification of factor payments as COE plus rent plus royalty plus interest plus profits plus mixed income of self-employed. Add up all these 6 factor payments, you get ND paid factor cost or domestic income. To this you add NFI, you get NN paid factor cost. Even for numerical, this is the formula: COE plus rent plus royalty plus interest plus profits plus mixed income will give you ND paid factor cost. To this you add NFIA, you get an NN paid factor cost. Precautions I'll be giving you in the next video. What precautions you should be taken while calculating national income by income method. That's all we have time for this short video. Till we meet next time. Goodbye guys, but don't forget to subscribe, share, like and comment on all our videos. In case you don't get it at one go, watch them repeatedly so that you understand the concepts. Do write in the comment box. Bye bye guys.
But I've known you too late as you fade away, as you fade away.